So are we going to have a hot inflation week or not? My name is Blake Morrow, and you are listening to the Week Ahead video. And boy, did we just come off an amazingly volatile week. Some very big moves in the US dollar, and also the S&P is stalling at some pretty key levels. So stick around. I'm going to give you all of that and more, and I'm going to bring in Nick from Trading Analytix in just a little bit to talk about some of these big developments this week, but also what we're looking for into the next week. Now, as I talk about this, I also want to talk about the FOMC just a little bit. The FOMC was this last week, and the Fed Chair Powell was faced, and we've found out this week that he's going to be faced, or the Fed is going to be faced with probably more than likely dealing with one or two things. One of two things: either hotter inflation, lower employment, and possibly both of those at the same time. And a lot of people, myself included, first thing we started saying is stagflation. When you get slow growth or no growth, job market meaning there, if we're losing jobs and the economy starts to slow, but we have inflation from tariffs, what's the Fed going to fight first? A lot of people I talk to believe that the Fed will tackle employment and the slow economy by cutting rates. Pretty much everybody universally you think or you hear from, they're going to tell you that same thing. I'm not sure if I'm in the same camp, and I'm interested to hear what you have to say as well, because inflation, as many of you know, is kind of like, when the toothpaste comes out of the bottle, it's hard to put the toothpaste back in the bottle. And I think the Fed does realize that. Will the Fed allow the economy to cool a little bit as they raise inflation to fight inflation if they have to and raise rates, or at least cut back on expectations of the market pricing in rate cuts, which that's what we're doing right now? Or would the Fed actually just cut rates because the economy is slowing at too fast of a pace? What do you guys think? I personally think that the Fed could stand pat for quite some time as they let the tariff effect hit the market, and then more importantly, they really are trying to contain the inflation genie from continue to get out of the bottle. So, like I said, I'd be interested to hear what you think. But that's what the Fed was faced with this week. Their commentary was, we're going to be waiting. We're going to wait. We're going to continue to wait. We're going to be patient. But at some point, they are going to have to take action, whether it's verbally or whether it is with rates in the future. So it's a very interesting week. The markets overall, if you look at the S&P, and I'll get over to the S&P really quick, you can see how the S&P is really stalled near that resistance that we were looking for last week. I drew this out for you over the last couple of weeks, so we'd stall around here around the 618. I was hoping we'd get to the 200 DMA. That's why I drew that out in green last week. We didn't quite reach it. We got pretty damn close, though. We did. And now the market's getting a little nervous, especially ahead of this weekend. Now, this weekend, I do want to talk about there could be some gaps in the market. Why? Because China and the U.S. are meeting. Well, Treasury Secretary Bessent and his counterpart are going to meet in Switzerland to talk about a China potential trade deal. Now, this is going to be really important to you guys, or to the markets this weekend, because more than likely we're going to see a pretty damn big gap in the market. And really you have to ask, what's at stake and what should we be looking for? What the market is really looking for is really a de-escalation. So they're going to be looking for more of a de-escalation on the trade war. Now, one of the things that was told to us today on Friday is that China said they're going to take it all in and look at all the details before they come back with a response. So if you think you're going to get a response from China this weekend, the chances are probably not. But with that being said, you're going to hear from the Trump administration, of course. And I'd be willing to put a lot of money on it that they're going to come back and say, the negotiations went well, we're making progress, and therefore the stock market's probably going to gap higher without hearing anything from the Chinese government. So, just expect there are going to be gaps this weekend, and so be prepared to trade them as we come into the markets on Monday. So speaking of which, I want to talk about this next week and what's happening this next week. So you can follow along right on ForexAnalytix. You can actually follow along in your calendar portion of the application if you want. But I'll be cruising through some things and going through some specific charts of what matters, especially in currencies, as we talk about economic data and what could actually be moving these currencies throughout the course of the week. So just kind of follow along. And also, I should mention while I'm here, if you haven't taken advantage of the Liberation Sale, this is a limited time offer for basically $3 a day. We've taken our monthly subscription of $150 a month. We've cut it down by 40%. So just over $85 a month. That's about $3 a day. You can be involved with one of the most active trading communities. You want to see what it looks like. This is our chat room. You can see what positions I'm in as I'm updating positions, as I'm getting in and out, what they look like, what positions they are. You got K-Man. You have Nick, who bought Ethereum. Nick, who's going to be joining us in a little bit, he bought Ethereum at 1,700, and as it's moved all the way up to like 20. Where let me see where it's at right now. It is at 2,300. Went as high as 2,500 this week. He made a killing on that. But it's not just myself; it's other traders too. Other traders posting exactly what they're buying and selling, and you could be doing that too, and having conversations with people that are like-minded, that drink Ling Ling beer. For example, thanks Kyle for that, or that are trading sterling against the 133.30 level, like Bubble Boy, who's in the Netherlands, I believe, or other traders that are posting what they're doing. It's Friday, guys, so we did a lot of Friday, like Benedict, who's looking at the U.S. dollar Canadian and why there's a bullish development and that divergence in some of the indicators. So if you want to have those types of conversations with traders, take advantage of the ForexAnalytix platform, because not only do you get this great platform that has analysis on 30 different products, not just currencies. I know we're ForexAnalytix, but we analyze Bitcoin and dollar index and WTI and boons and silver and gold and treasuries. So we have different types of analysis, whether it's harmonic analysis, whether it's Elliott waves, whether it's basic technical analysis that's updated throughout the course of the week and throughout the course of the day. And we have Live Squawk. There's so many tools involved and inside of ForexAnalytix, so take advantage of that offer. Okay, with that being said, let's go over to the live charts. You can actually, whoops, I didn't mean to do that. You can go over to the live charts in ForexAnalytix if you wish. But what I'm going to be doing, because you can cover them right here. But whoops, not boons. That's not what I wanted to select, because it's not intraday. You can look at your currency pairs from here, or the different indices that I'm talking about. But I'm going to draw them on these charts because these are the ones that I use specifically for you guys each and every week. So let's start off with the first big really event of next week is going to be Tuesday morning. We're going to have the German ZEW. Now, I do want to talk about the euro, because the euro finally, it took forever for this head and shoulder pattern to start playing out. But what we did is we broke down below the previous breakout point, which was the July 2023 highs. We are now testing, and did test today, the previous highs from back here of September of this year. Now, a lot of people are looking at this pattern, which I'm going to, or this chart development, which I'm going to draw out for you. Okay, a lot of people are looking at this rising channel and believe that we are on channel support. Well, considering we're stopped up at this support zone, that makes a lot of sense. But the fact of the matter is, the euro dollar is trading below this 112.70 level. 112.70, 112.80, that previous high from back here in July of 2023. And it's I think between a rock and a hard place right now. And I think the way the euro is going to trade and where the dollar is going to trade is probably on the back or on the heels of the news this weekend, the news stream that we get from China or from the U.S. on how the negotiations with the China-U.S. trade war are going. Now, some of you are probably going to be asking, what would happen? If there's more positive news on the trade war, is that bad for the dollar? Is it good for the dollar? And frankly, I think the market, as you can see, it's very choppy, is probably a little bit confused as well. What we've seen is positive news out of the U.S., and we saw it just as early as this week when the U.S. and the U.K. cobbled together their trade deal. Now, I know some of you are going to jump in the comments and say it wasn't much of a deal. It's not going to do anything. I know you're gonna have those comments, and feel free to jump in the comments and tell us how you feel about the U.S. UK trade deal, if it was all theater or not. But what we did see is we saw the dollar strengthen as a result. So I think the initial response at least is going to be dollar positive if traders walk away Sunday night feeling that the U.S. and China are that much closer to putting together a trade deal. If not, we could see the dollar sell off. But right now, the euro dollar looks poised to break lower and complete its head and shoulder patterns. But here's where I'm going to give you the buts, guys. I want to go back to last couple of weeks and talk about how important, in my opinion, this trend line was. This trend line that you see right here that was broken goes all the way back to the highs back at 160. Now that trend line is going to come in right around. My opinion is going to be right around the 111 level, okay? And if you notice, the 618 retracement on a weekly basis comes in around 110.56. So I think this is going to be very significant support if the euro makes its way down there. Now, I know we're talking about the German ZEW data coming in on Tuesday. I don't think that's going to be the catalyst that drives us down there if we're going down there. But it is something to be watching, especially knowing what's happening over this weekend. Now, moving right along, we have US CPI. So let's talk about the dollar index really quick, because CPI, it is coming out on Tuesday. The market is expecting that the data is going to be relatively hot, or at least in line with expectations. And, the fear is, again, this is where we start talking about, what's happening with the dollar and what the Fed is going to do. I feel that stronger inflation is really going to have a bullish effect on the dollar, because I think the Fed is going to be more likely to fight, higher inflation. That may not be by raising rates, but it may be by driving rate cut expectations out of the market. So when you're looking at the dollar index, as you can see, is flirting with the major breakout point, or breakdown point, excuse me. We're flirting with it today. As we speak, we're trading at 100.30. This is a very big level in the dollar. Make no bones about it. Are we developing a bear flag formation? Still, yes, possibly. We've talked about this. Is the dollar, we talked about this all week, but can the dollar actually turn higher and start to recover? Yes, it possibly can. And what I'd be looking for is this 38% retracement. That's going to be major resistance for the dollar index. Now, in the event that the dollar breaks down through flag support, we would then be looking for a continuation lower in the dollar index. So if I had to give you a percentage right now, it's still in a bearish formation. However, I think and I hate to do this to you guys, but the odds are now at 50-50, because now you're trying to break out of previous support, which was current resistance. We're trying to break out to the upside, but we still have a bearish technical formation. So I think it's kind of 50-50. We're going to get some good indication of which way the dollar is going to go, probably as early as Tuesday of next week. Now, moving right along, Tuesday night out of Australia, we have the wage price index. And if you look at the Aussie dollar tried to break out, but we failed this week. And we failed above the 200 DMA, and we're back in this range. But I actually want to draw something out a little bit more near term that, obviously, if you're using ForexAnalytix, you already know this, right? If I take you over here to the Aussie dollar, you're going to be very well aware of what I'm saying here. Okay. You'll notice that on our Aussie dollar charts, we have this rising trend line. Well, guess what? That rising trend line was tested overnight. That rising trend line looks like this. So if we break that rising trend line, because again, you think in China, and looking at the Aussie dollar, you go, okay, well, maybe that was a false breakout above the 200 DMA. In the event that the Aussie breaks down right through here, we would have a breakdown. Now, think about this really quick. I want you to guys to just think about everything that's transpired here in the Aussie dollar. We had a false breakdown, whoops, right here, false breakdown that yielded a breakout, which it did. Now, if we have a false breakout, what does that usually yield? A breakdown. How far can we go? I would assume somewhere down here, right? So that is the risk right now with the Aussie, especially if we start breaking below 63.70 and then 63.25, which is right over here. I think that becomes a big risk for the Aussie dollar in the days ahead. So just keep your eye on the Aussie, especially. Not only do you have wage price index on Tuesday night, but on Wednesday, I say Tuesday night, it's actually Wednesday morning in Australia. Thursday morning in Australia, you have Aussie employment. And yes, if there's something that could move the Aussie dollar, it would be the employment data. Absolutely. That is Thursday morning in Australia. Speaking of Thursday morning, we will have producer prices and retail sales out of the U.S. I've already gone over the dollar. We have Empire State Manufacturing, Philly Fed, both manufacturing datas, pieces that will be out. A lot of economists will be watching those very carefully. And then Powell, he's speaking at a conference. Now, the conference is, let me make sure I get my notes correct here. He is speaking, he's delivering the opening remarks at the second Thomas Laubach Research Conference in Washington, D.C. If he's delivering the opening comments, chances are he will not be he will not be answering questions. So we'll just be, it'll probably be a canned speech, and we should be able to get it a few minutes ahead of time. So just keep your eye on that on Thursday morning. Now, also on Thursday, we have the Banxico rate decision. Now, you guys know, I feel like I beat a dead horse all the time here with the dollar Mexican peso, but I'm going to say it as I say it every week. And if you listen to our daily shows that are free, you hear me say this every day. And matter of fact, if you don't know how to get to our free shows, let me go ahead and show you. You just go over to our website, go to where it says webinars. We have our free flow show that's hosted by Ryan Littlestone with K-Man, and then on every day, if you want to hear myself and the rest of the team, also Ryan and K-Man come in and let us know what has happened in European trade. You can register right here for the Face show. So make sure you listen to those, because Dale Pinkert, he brings on some great interviews each and every week. It's so worth your time. Plus, if you want an updated view on how I'm feeling about the markets, you can do that right at the on those shows each and every day. And by the way, we talk about the dollar Mexican peso because I think K-Man's running a short in the dollar Mex. You can always find out exactly what he's doing right here in the trades room. If you want to go over to the trades room and find out what K-Man's running, this is his Kiwi trade, but he updates that throughout the course of the day as well. We're looking for a potential breakdown. We looked for a move back up towards the 1985-84 level. We failed to this week at 1978, I believe, was the high. And then we are, in process of a long-term rounded top formation, which is a bearish formation in the dollar Mexican peso. So, continued weakness in the dollar Mex, because Mexico, as I've said this a million times, Mexico's got a lot to work to do with the U.S., and the trade negotiations are probably going to be fruitful for the Mexican peso. But Banxico is expected to cut rates by 0.5%. That's what they're expected to do. So watch it, because this further weakness would mean that the Mexican peso is gaining strength. Maybe Banxico is not quite as dovish moving forward. And if that is the case, we might see the dollar Mexican peso finally succumb below this 1940 level support. You can see it right through here. We start breaking through there, and next thing you know, we're trading down around 19 in the dollar Mexican peso. So still very bearish. Thursday night or Friday morning, we're going to have New Zealand inflation expectations. This is going to be one of our setups this week. So make sure you stick around for the very end of this video, because I give you 3 trade setups for next week. I talk about, and then I review the ones from the previous week. So the New Zealand dollar will be on the setups, but take a look how we are hovering around that 200. Whoops, I didn't mean to do that. We're hovering around that 200 DMA, which is very, very important support, in my opinion. All right, so we'll come back to the Kiwi dollar. And by the way, if you enjoy these videos and you think they're beneficial for you each and every week, getting prepared for the next week, make sure you give me a thumbs up, subscribe to the channel below. It's free to subscribe. It's free to give us a thumbs up. And it's free to comment down below and let us know how you feel. And that's really for the team as well, because the team puts this together so you can have it early in the weekend, so you have your whole weekend to really prepare. We hope and we appreciate this being part of your weekly process. So if you can, give us and our team a big thumbs up. We'd appreciate that. All right, on Friday, to wrap things up for the week, we have the Swiss National Bank Schlegel. I do this every single week. You can see the US dollar Swiss franc is holding below the key 143.30 level. We continue to be capped by that. Now, in the event Schlegel starts discussing negative rates, we could see a situation where the Swiss franc really starts to weaken. Is that going to be the case? Is that possible? I believe it is possible. He is speaking Friday morning, and he is speaking he has a speech called Trade War and Geopolitical Upheaval, Monetary Policy in Times of Uncertainty. And right now, as traders are uncertain, what do they run to? They run to the Swiss franc. Well, you guys have to understand that the Swiss economy is really driven by luxury good exports, namely watches, Rolexes, the whole watch industry. I think it's a huge industry, but is a huge part of Switzerland's economy. So one of the things that Switzerland's having an issue with is a strong currency and tariffs. I mean, their watch industry is going to be decimated if Schlegel doesn't start to try to weaken their currency. Does he have to do it with negative rates? Well, he's talking about monetary policy. So this could be a big deal on Friday morning if you all are trading the Swiss franc, whether it's the US dollar Swiss franc or the Euro Swiss, which would be another one to keep on the radar. All right, moving right along, we have University of Michigan consumer sentiment data. That is going to be released on Friday. And it's going to be pretty important because even though it's a sampling, 5,000 people sampling, it's going to be important just to see what inflation expectations are and consumer sentiment as well. You know, one of the things that doesn't get talked about a lot, but should be, is housing prices here in the U.S. They are really starting to come down. And so when you have, the top 10% of the U.S. economy is they're holders of U.S. stocks and real estate. If the real estate portfolios are losing value, that changes the sentiment of consumers. And most Americans, their largest investment is not in the stock market, it's in their home. So if their home is losing in value, it changes their sentiment as well. How they're going to spend their money, what they're going to spend their extra money on. So consumer sentiment is going to be huge as we go into the next few months, especially with the trade war looming large here in the United States. Now, I'm going to bring in Nick from Trading Analytix. He's going to talk about the S&P. He's already done a video. He's going to actually do a full week ahead video himself. He will be posting that on the Trading Analytix Twitter handle. So you can go down in the if you're watching us on YouTube, you can go down in the description below. Follow Nick on Twitter and Trading Analytix on Twitter, so you can get that week ahead video for yourself from Nick. But before I bring in Nick, let me mention this. We have so much volatility in the markets. Because we have so much volatility in the markets, the way we could take advantage of that, or you could take advantage of that, is with the Trader Funding Program. if you're new to the trader funding program, I automatically, me personally, give you a one-on-one meeting for 45 minutes and we discuss what to expect, how to trade the funding programs. That is with the one-step assessment. If you go into the instant funding, which you can do, you can go to immediate live trading accounts and instantly get funded. You're going to skip the assessment, so you don't have to have a one-on-one with me. But if you do take a one-step assessment and you want to access larger amounts of capital, anywhere from $25,000 up to $1 million, you get that one-on-one conversation. And if you have to take another assessment over $100,000, you can request to have another one-on-one conversation with me. I just talked to one of our traders. His name is Nuno. Nuno is not in the United States. I had a conversation with him today. Nuno, if you're listening in, how you doing? I will not give out your last name, of course. Nuno and I were talking today about, when he failed his one of his assessments. He's like, I got so close, but when I got so close, what happened? And we started talking about the psychology of what he's going through as he's going through an assessment. So if you think that one-on-one time with me is valuable in helping you pass an assessment, make sure you take a look at these one-step assessments. They are very, very powerful, and you can access up to $1 million. You have to make 10% without losing more than 6% and not having more than a 5% intraday drawdown, because if you lose more than 5% intraday, that means you're having a hard time controlling risk. Therefore, you're not a good candidate to be trading, our capital. But if you understand the very basics, because you have no time requirements to pass, if you think you can make 10% without losing more than 6% on a high watermark basis, that means as your account goes up, you can't lose more than 6% of the high watermark. If you think you can do that over an unlimited amount of time, check out the Trader Funding Program. Plus, you get involved in the ForexAnalytix community. So not only do you get access to this wonderful tool called ForexAnalytix, but you also get access to the trades room. You can actually see what Ryan's trading. You can actually see that Ryan's trading the Aussie dollar on the long side and moving his stops. You could talk to other traders that are, trading the Swissy on the long side, like DK Trader or Anders that's in our community. You can see what I'm doing. You can talk to us about the markets. How powerful is that to you to have access to our analysts at ForexAnalytix or myself while you're trying to go through an assessment? So check out the Trader Funding Program. And once again, you can choose instant funding. You don't have to take a one-step assessment. So check it out. See if it's right for you. All right, with that being said, I'm going to give you to Nick over at Trading Analytix. He's going to guide you through how he's seeing the equity markets and some individual stocks. So enjoy your time with Nick. I'll see you in a minute.
Hello everybody, my name is Nick Groves with Trading Analytix. Blake, thank you as always for passing on over to me. We had another fun week in the equity markets. Just kidding, we were sideways the whole time for the most part. It was tough. Leading into this week, it certainly didn't look like a range coming in. Looked like we could have some continuation higher, but as you'll notice, we've been in this range really. And what was interesting about yesterday was that we did actually create a false breakout here. We also created one as well in the NASDAQ. You can see this slight breach here. So there's a lot of speculation going on regarding Trump headlines. We certainly had a lot of optimism after pretty much during the Fed, right? So the Fed came out and was basically, at a standstill, couldn't say yes or no to much. But at the same time as that was occurring, Trump headlines came out about a deal the next day. And that deal involved the UK and a deal with the UK. But I just want to show you all, take a look here at the U.S. goods trade deficit or surplus with major trading partners in 2024. You'll notice how small the UK is relative to countries like China, the EU, Mexico. So Is that enough to really get a sustained rally? I think it's tough to say. I think there's also been some optimism on another big announcement out of Trump, and I'm noticing people talking about calls into Monday. If that news disappoints, I think you could see a break lower here as people are already exposed off optimism, because I think the concrete fundamentals that we're seeing are not all that great, right? We had GDP weakening, and we're going to have to see how CPI comes in this week, because I think if it ticks higher, you could begin to see some narratives about stagflation. You'll certainly see the Fed projections shift as well. It feels as if people have been quite bullish, and you'll notice based off Bank of America's private client buying streaks in their data history, we've never seen this amount of consecutive weeks that private clients have been buying since 2008, okay? So quite a lot of optimism on the retail side, majority retail side, coming in here right now, which doesn't make me feel all that rosy. I have noticed that we have shifted back into greed, but seeing this false breakout and looking at a few other things, this is one thing to take into account. Take a look at this AAII bear report. You guys know I like to track this. We've had 11 weeks straight of bears, basically the bull bear rating under, 50%, which is not common, right? So taking a look at this again, you'll notice the last times that we've seen this, it typically involves more downside in the equity market. So I think after this large pop that we've seen, there is a risk for some downside. And I will also point out, let's see here, my input is off. I got to add a 0 here. We're also near the 200-day moving average, just above here. From a structure standpoint, we are still in a bear trend. You have a high, a low, a lower high, a lower low, and a lower high at the moment. So bears really need to wake up this next week if they want to hold this trend. Now, as far as support and resistance goes, I feel as if very strong support is going to be at 55.80. And if that breaks, we're going to be looking at close to 5,500 or 54.70 or so. I think in the same way where a lot of people were bearish in here, I think a lot of people are getting bullish up here, and I would not be surprised to see us potentially come down and take out this 5,500 level again. Now, to the upside, this bear trend breaks if you start getting back above really 5780, 5800. That's when things really start to get interesting. So we're going to have to see if that plays out. As far as the big tech goes, it's been a bit of a mixed bag. We saw a really ugly day out of Google, and the chart isn't looking so great. It rejected near the 38.2. This comes after news that Google might be at threat of their throne, right? Apple's talking about using AI searching to, replace Google search. So hopefully Google can find a way to use all their money to develop something, but this really freaked investors out. You also notice Tesla had a nice pop higher. We've been talking in the community about this breakout here and that it could stretch above 300. We had a nice pop above 300. The 38.2 from a weekly standpoint comes in at 318. I do feel as if that will be significant resistance. But what you'll notice here is that we do have some divergence on the 1 hour on this move. Okay, so that is an important development. And last but not least, I have to bring up crypto. Crypto, Ethereum especially, has had one heck of a move recently. We've been talking about it in the chat room. We've had a false breakdown on the weekly. We were talking about, hey, maybe we should be buying here on a break above 1900, and it certainly squeezed. But now we're at the weekly 38.2, pretty much tagged it today, and I think that we could be in for somewhat of a pullback. Now, if you're interested in trying to play it to the long side, I would probably be looking for the 2000 level again, somewhere around here, a 38.2 pullback, and we'll have to see how it reacts from there. Bitcoin is surging higher, not far from all-time highs. A lot going on in this market. I will be putting out a week ahead video myself on Trading Analytix. You can catch me there. It should be posted by Sunday. And with that, I hope you all have a great weekend, and we'll chat soon. Thanks so much. Cheers.
All right, Nick, thank you very much for that. I appreciate you coming in. I haven't seen your video, but I watch it every week because you're filming when I'm filming. So great to have you here. Now, from here, I do want to cover a couple of things in the markets, as you guys know. I'm not going to cover the S&P right now because we're going to talk about this in the review portion of this video, which is at the very end. We're going to review some of the setups from last week, and I'm going to give you my top 3 setups of this week. But just realize that the S&P is stalling ahead of the 200 DMA. You know, I want to talk about this actually really quick. I want to say, and I've said this on our daily shows, you know, everybody and their mother's uncle's nephew's monkey and the monkey's parrot is looking to sell the S&P on an approach to the 200 DMA. I don't think I've met one person that hasn't said around the 200 DMA or around the 5,800, I'm looking to sell. Everybody's looking to sell up there. Well, when you get a situation like that, you'll notice that you meet so much selling pressure, so many sellers are up here that it's starting to thwart us even being able to get to the 200 DMA because so many people are trying to sell that area. So with that being said, you kind of know where people are positioned in the markets, which is, in my opinion, very important. All right, moving right along, I did want to talk about gold. Gold, you know, I was discussing with Jim Welsh from Macrotides a couple last week, and he was saying that gold he think is top, but I'm going to tell you, I think we're in a bullish consolidation right now, a very bullish consolidation in gold. Now, will gold continue higher? Based on the trend and based on a bullish consolidation in a bullish trend, my gut instinct is, yeah, we are going to continue higher. But I think a lot of this has to do with what happens with China and the U.S. But because we have a triangle formation, the fact of the matter is, if we break either direction, I think it's going to give us some relatively good direction on the markets. The next chart I wanted to cover is copper. Now, copper had a really aggressive sell-off actually last night. It sold off, broke support, then it had an aggressive rally, squeezed out a bunch of shorts. But the fact of the matter is, copper is really starting to stall. And matter of fact, let's delete this, and you'll notice where it is stalling, which I think is really important. Because if you take this high right over here, which is on March 25th, and you take this spike low, you'll see that we've stalled around the 618 retracement. So my 2 cents are in copper, while we're below this previous support, which is current resistance, the risk still remains to the downside. And given the fact that we have China-US negotiations, and I have a feeling come Monday, you know, after we get all the positive commentary from the Trump administration and we don't hear anything from China, people are going to assume that these talks are going to stretch on for a while, which is going to weigh on global growth, which therefore is going to weigh on copper. So keep your eye on copper. I don't think it's really going much higher than what we've seen near term, but what is really at risk right now is a move back to $4. And this is going to be very critical support if we get back down there to $4 again. So keep your eye on copper. I think it is definitely worth noting. I do want to talk about Bitcoin because Bitcoin has surprised so many people. Yeah, that would be me. I would say myself included. You know, when we broke the 618, I said, okay, well, you know, we broke 96,000. First thing I said, we're going to 102,000. We actually blew past that. Now, I've always been in the camp, or I've been in the camp for a long time, that we are developing some sort of long-term Wyckoff distribution pattern that is bearish longer term. But the sheer fact that Bitcoin rallied past 102,000 has me very, very nervous that we might actually hit a brand new high in Bitcoin. I wasn't expecting it, but just, I mean, how many times do I expect something to happen and it doesn't work out the way that I feel? Quite a bit. That's what being a trader is. You assume something's going to happen, and if it does and it fits what you believe is going to happen, that usually helps you trade it on a more, confident level. But when things develop and you weren't expecting it, those are the times that I usually take a step back and say, wow, all right, well, I think there's going to be some fresh ideas coming up, but it isn't right now. And that's what I'm seeing in Bitcoin. We start breaking above 105,000, we will be taking on 110,000, which is going to be those previous all-time highs. So keep your eye on Bitcoin. It does not look bearish, not at all. I did want to also talk about crude oil, because crude, we sold off once again all the way down to the $55 level. All right, we haven't talked about crude in a while. Let me get rid of these big arrows. We obviously failed at 65 bucks. We came to 55. We bounced. You can see we're a pretty important support. Now, what you might not notice, because if you were listening to today's show, no, I'm sorry. If you were looking at ForexAnalytix, actually, let's go to crude oil, and you read this analysis from 6 hours ago, it said crude oil has reached the 618 retracement at 61.37. The high today was 61.42 about 30 minutes ago, and we are at key resistance for intraday bears to look for shorts. That's when we were up at 61. We were at 61.05 at the time that I posted that chart. I posted it this morning. That's why I know that. You'll notice that since that happened, we basically hit the 618 retracement, and that was 6 hours ago. So we came off right pretty quick, and we've bounced a little bit, but you can see how important this resistance is. If we get above 61.50, that could open the door back up towards 65. But that was a big rejection of resistance 6 hours ago, and you can see 6 hours ago it really fell, a couple of bucks, and now we're just kind of consolidating below that key Fibonacci level, which I think is worth noting for yourself. One of the last market I actually should talk about. I know this has been a long video. I get it. I'm going to hurry up, guys. But man, I cannot not talk about the German DAX back up at all-time highs. I mean, look at that V-shaped recovery, and I've said this since the beginning of the year. Actually, at the very end of the year, I said one of the trades to look out for in 2025 is for European markets to continue to outpace U.S. markets. Well, if you want to see how true that is, here you go. The DAX sold off. Yes, it sold off, but it is recovered back to all-time highs, where the S&P can't even get back to the 200 DMA as we've been talking about. That is a huge, huge recovery in the German DAX. So what that means to me is if things work out in a positive light, it's up for debate. You guys can debate it. What's going to happen with U.S. and European negotiations in this trade war? If things work out in a positive light, I'd like to, say, I'm a glass half full type of guy. If it does, the breakout to the upside could be massive. So you guys can see we're at all-time highs. Obviously, if we reject here, we can see a reversal. But keep your eye on the DAX, because, boy, it does not want to pull back much. All right, this is the time that I am going to go over, the top trades of last week. I'm going to go over the top trades of last week, and I'm going to review them. And then I'm going to give you the top 3 trades of this week. And once again, if you think these videos are extremely beneficial for you to help you prepare for your trading week, make sure you give our team a big thumbs up, subscribe to the channel. Hell, subscribe to ForexAnalytix before we remove the liberation offer. Lock in those low prices. Grandfather yourself in, because that's what we do. If you lock in these low prices, when we bring up our prices, you're locked in. So if you lock in these low prices, do it, and subscribe to the channel, and give us a thumbs up, and jump down in the comments below. Okay. Hopefully you're enjoying this video. Let's get to it. First setup from last week. My notes say review. Buy the euro dollar at 111.50. Well, we came down to what, as you guys can obviously, is channel support. We went as low as 112. I think the low was 111.96. So we came within about 45 pips of that 111.50, and then we bounced. So did we reach that level? We did not. So, did that trade come to fruition? It didn't. So first trade, it didn't not work out. It just didn't reach the level that we wanted to be involved in. So trade number 1, scratch. Trade number 2, long Euro Aussie on a dip to 72.60. Well, the Euro Aussie didn't do anything. It dropped. Guess what? I'm actually long Euro Aussie right now because of the dip below the 50 DMA. I'm long the Euro Aussie, but no, it didn't get all the way down to 172.50. 172.60, I'm sorry. That's what my notes say. So did trade setup number 2, another scratch. It just didn't happen, unfortunately. Hey, it's fine. If you have a trade setup and it doesn't get to your levels and you don't take advantage of it, so what? You move on to the next trade setup, which we will do. The third trade setup was sell the S&P at the 200 DMA. So trade setup number 3, we didn't quite get there. We got so damn close though. I mean, if you look at the daily candle, that high was at 57.21 and the 200 DMA is at 57.65. So we came within 40 points of that level and then started to move down. Well, I guess based on our trade ideas, it didn't quite get to the 200 DMA, so it didn't count. So I had 3 trade setups for you. And as rare as this is, because I don't know when the last time that's happened for us, 3 trade setups for last week, 3 of them, none of them, they didn't not work. They didn't work. They didn't not work. They just didn't happen. So we had 3 scratches, which is fine. I sit here all day long waiting for things to happen, and they don't. That's part of being a trader, right? That's all right, because this week I've got 3 new trade setups for you. So trade setup number 1, yes, going back to the euro dollar, but we are going to be buying the euro dollar down around the 111 to 110.50 level because, like I said, we are going to complete the head and shoulder pattern. By the way, to complete this head and shoulder pattern is lower than this. It's actually 109.50, I want to say. As I've mentioned this to you guys before. Whoops, didn't want to do that. I don't think head and shoulder patterns complete that often. So instead of getting all the way down here to complete, what I think is going to happen is we are going to drop to the 618 retracement here and then bounce. So somewhere between 111 and 110.50, I'm looking for longs next week in the euro dollar. Come on, euro. Daddy needs a new pair of shoes. Let's see it. All right, that's trade setup number 1. Trade setup number 2, double top in the Kiwi. Like I said, I was going to mention the Kiwi, but what we're looking for a break of, now let me draw this out for you guys. That's a nice double top setting up, and let me get rid of this one, and let's zoom in a little, okay? So what I'm looking for is a break below today's lows, which would be 57.70. What is it? Let me look at the number. The low is 57. I'm sorry. It's 58.70. So break below 58.70. We are looking for a double top, and that double top should play all the way back down to about 57 and change. So we're looking for a bearish break of Thursday, Friday lows. That would be actually today's lows because it would happen in Asian trade last night. So that's trade setup number 2, a nice double top setting up in the Kiwi. Let's get rid of this. We don't need this big orb that we've got. Trade setup number 3. Now, you might find this a little bit of a shocker with the S&P, but I am looking to play on the long side. What? At 5,500. Now, here's the buts. I'm looking to play it on the long side, but I am also looking for a stop and reverse because if we drop below 5,500, I think that's such a big pivot that if it breaks below 5,500, I'll be looking for a short. So I think, for lack of better terms, the 5,500 level is going to give you a pivotal area to trade from. It's going to be a tradable level. But if we break below it, and it might even give you 2 trades, right? It might even allow you to trade it on both sides. You can trade a bounce and then a break below 5,500 and you can get short. Speaking of which, I meant to mention this with the euro. This is a 2-for-1 as well. I'm also looking to short the euro dollar below 112 because this is channel support. It's the overnight low last night's lows. So if we break below 112, it's 111.90 something. We break below that, looking for it to short down to 110.50 or 111, and then on the opposite direction. So I'm looking to trade in both directions, both the euro and the S&P. So, guys and gals, with all that being said, I know that this is a long video, and I hope that it has really helped you in your preparation for the next week. And if you found this video at all helpful to you, please, like I said, give me a thumbs up, give our team a thumbs up, subscribe to our channel. It is free to subscribe, and subscribe to ForexAnalytix. Take advantage of the Liberation offer. And I want to thank you for spending your weekend with me. I know it's your most valuable time that you have, and you're spending with me, and that means a lot to me. So thank you very much. My name is Blake Morrow. I will catch you Monday morning on The Face Show. Have a great remainder of your weekend. Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.